kick off, the first theme is going to be around sustainable agribusiness. And to conduct that particular discussion, we are joined by Zhann Meyer. He is the head of agricultural commodities at Nedbank. They are going to be looking at, as I mentioned, sustainable agribusiness, but asking, or rather saying that examining farming through the ESG lens. Zhann will be on stage to introduce his panelists. So Zhann, over to you.
What we're talking about here is critical in terms of sustainable agriculture. I think the organizers and Pete and his team has managed to put together a panel of passionate experts. And I think that's important, not only experts, but people who's passionate about ESG, the angle in their business, and how integrally important this has become to go ahead and actually make a success. And from my far left, we've got Andrea Renner. She's the impact analyst and ESG specialist for for Barak Fund. Sorry, Anish, I'm seeing you on the screen there. And then we've got Wouter Kool. Wouter heads up the representative office of Rabobank for East and Southern Africa. He's based in Nairobi. On my immediate left here is Henk Agenbach. Henk is the CEO of the Coöperatie in Humansdorp. And then, maybe not out of sight and definitely not out of mind, Anish, welcome. Anish is the Group Treasury Officer for Export Trading Group. He's joining us from Dubai. So maybe, Anish, I'm going to start with you, purely because I accidentally got your title wrong. But just in terms of ESG in your business, ETG touches the lives of 8 million small-scale farmers on the African continent, whether it's through provision of inputs or creating a market for outputs. And surely from your perspective, you would want to have a sustainable and ESG angle towards these farmers to make sure that your market is secure, both from an input and output perspective. But I think what I've also known to know about ETG over the years is that you take this very seriously. Can you maybe expand on what you guys are doing and what's the existing state of play?
Thank you, Zhann. And first of all, it is overwhelming to be part of this discussion because, as you rightly said, sustainability is very core to what we do at ETG. And we try doing it in such a way that we add value to the farmers. We divide our footprint into two broad elements. The first element is to look at the projects which are more commercial in nature but have a sustainability and development impact. And the second category of projects are non-commercial in nature, which are purely oriented towards helping our farmers and their subsistence community. So the first set of projects where we work with our suppliers, our customers, and achieve certain targets, which can be in the form of child labor monitoring and remediation, village loan schemes, providing extension and farm services to the smallholder farmers, income enhancing and EV generation. So these projects are more commercially oriented where ETG and its partners get the benefit of doing the commercial projects with these farmers and also include increasing the income of farmers directly. The second set of projects that we do is non-commercial projects where we don't look at the P&L part. These are the projects where we purely look at the development impact while bringing the smallholder farmers and women into the mainstream of the work by giving training and development to them and also empowering them to do certain projects that help them to increase the scope of activities they can do. And a combination of these two sort of building blocks helps us to achieve long-term sustainable strategy at the moment. Thank you.
Great, thanks, Anish. And Henk, I want to come to you because your focus is slightly different. You guys look at very strong environmental impact through shade netting in the citrus industry. Your farmers are, by vast majority, large commercial farmers. Can you maybe just talk to us about the environmental impact, maybe the shade netting, the water saving, and those impacts? And then after that, I want to talk about your socio-economic programs that you have, which I think is important. I think the Coöperatie is shown to be a leader in this industry. But if we can maybe chat about the environmental angles, and then after that, maybe touch on your BEE programs and what you're doing for the farmers in the community.
Thank you. Zhann. Yeah, in terms of the environmental impact, at this stage, it's mostly around the netting that we put over orchards that basically increases the water efficiency and the quality of the fruit that's being produced. It's a fast-growing, if you can find the right structure of the finance, obviously, with it. Some farmers can afford to do it from their own cash flow, but it's putting a financial structure behind it to afford it. And then they, by the increased efficiencies and the quality of the fruit that improves, it's quite a short payback period in terms of the investment that's being made. That's maybe one aspect. We also, in terms of a GIS system, a global geographical information system that we're currently using, and I think we're sort of leaders in that, and I heard quite a lot of it yesterday as well. How do you make sure that your finance is actually safe and secure? In terms of the farming operations now, it's possible for us to see on a 10 meter by 10 meter pixel what's being grown. There are basically three things that you can monitor. The one is moisture, the moisture in the plants, the moisture stress. You can measure the plant nutrition status of the plants, and also the production potential, the vegetative growth of the plants. And through that, it's every 5 days, there's a satellite picture being taken, and you can monitor that, those three things. We're also currently looking at even the soil health. You can even monitor that. So the technology is there and the AI is there, and we're trying to sort of also specialize it to the individual farms. We currently have 130,000 hectares signed up, and where we can see quite a lot of detail. And if I can then come to the social impact part, where we basically follow a two-pronged approach. We formed a community trust that basically look after the communities in all the areas where we operate. And we have various focus, basically four focus points. It's health. Just want to quickly come to it. It's health and wellness, caring for the elderly, education and training, and job creation. And with technology now, it's possible, and we have a couple of programs like that, to bring the best education in the world to every community. And it's actually very simple. And the pandemic has shown us how quickly we can virtually integrate. So with our, that's the community side of things, and then on the farmer development side, we're looking at smallholder farmers also to commercialize some of the farms that's government owned at this stage. And with 200 million of loan capital, we've managed to reach 66,000 people that's dependent on those farming operations. And through one of those farms, I can now say that we at our next board meeting is going to co-opt one of those women onto our board. And if you see where they started, off with not even having a bank account. So she's up to that level in terms of her or their farming operation. So I think in general, and also the technology now makes it possible to assist those farmers from our head office. We can even see that there's a nozzle blocked on a center pivot, because the moisture stress shows you that there's something wrong. So in terms of employing the technology, it's now becoming much easier to assist farmers, smallholder farmers in the most rural areas.
So the measurement and reporting becomes easier through the use of agri-tech.
Yeah.
Wouter, Henk spoke about funding, and naturally this is a critical part of ESG going forward. Your view as Rabo, in terms of the view of the greater public out there, the communities that you're involved with, is this an integral part of Rabo's movement and strategy going forward, is to attach this ESG component to your loans, or is it a sideline thing? And I think that's where the risk is. I hope the answer is no.
Answer is yes. I think the last point you touch upon is, I think, for everybody very important to understand. ESG is not something that companies want to do just because it looks good. It's becoming an integral part of, I think, society, and through that in all different companies like Henk's Humansdorp or Anish's ETG, but also for us as Rabobank, it's becoming an integrated part of our business. Because it's not just something that we have to do from a long-term climate change perspective or other reasons, but also from a risk perspective. So a couple of big trends there. So one big trend in Europe is that with the new Green Deal that is being done there, there's a whole bunch of legislation coming, and in 2055 it will be very difficult to bring into Europe, or it will be impossible to bring in products into Europe that don't have the same carbon footprint as the farmers in Europe themselves will be pushed to reduce to a certain level. Yeah. So that is a big change coming there. And that will also affect how South African farmers who are exporting to Europe will be doing business. So that's one element. And that also related to that, the concern of climate change, which is one of the ESG parts, is also making central banks starting to look more and more how resilient are, for example, the portfolios of central banks, of banks. How fit are they for the future? And that results in us, for the first time, having, I don't have the number now, but we've tried to put together a number on how big is in our rural portfolio, how big is our carbon footprint, for example. What I'm trying to say, the environment, the regulatory environment, the public, everything has changed. So it's becoming an integral part of our assessment. So when we, for example, look at a client, we don't only look anymore at the financials or management who is working there, but we also very much look at how are they managing the ESG risks. And it's going now as far in that if the ESG risks are not properly managed, they are less fit for the future, and we need to apply more capital. So that would result in a higher pricing as well. So that is really in the banker's mind, at least at Rabo, starting to change the thought of we need to address these issues. But that's not only Rabo, that's also Nedbank, I expect, and it's also a lot of other participants in the, let's say, food and agri market. But that's also opening up a lot of doors. You asked about funding, and I think that, we have a good example here with Humansdorp and the shade netting. We have a good example with ETG working on smallholder farmers. And I think that, the necessity of having to do this creates that there are a lot of funds available, direct funds through banks, through green loans or green bonds. There's also a lot of equity available. I think we even have an own venture capital fund that looks at fintech, agri-related innovations that might help also maybe in respect of monitoring, which you touched. And then there are also like specific funds where, because certain of these projects are rather risky, where we share the risk between a group of partners, blended finance, we call that solution, and we have an Agri3 fund where there's government-related money in there where we can make things financeable that pure from a commercial perspective are not yet. So a very long answer to say we've moved into that everybody has to do it, but that's also opening up a lot of opportunity in my view.
Yeah, I think just a line to that is Nedbank recently changed our purpose, not our mission, not our vision. Our purpose is to be money experts who do good for individuals, families, communities, and businesses. And that leads to that ESG part that's saying, this is the reason why we exist. So if you do that as your purpose, I think it actually shows, and it's not only us, obviously Rabo and a whole lot of other institutions here has decided that it's become critical. Andrea, I want to ask you about Barak, and your role, obviously, as impact analyst is fairly new. Does this mean that Barak is taking in a new direction, or has this always been your strategy? And then maybe following on top of that, are you seeing investors approaching you with the ESG angle, with people that would have not normally come and spoken to Barak, but now because of your role and the work that you're doing, these people coming to you and say, how do we get involved?
Yes, certainly. Well, I think that ESG investing ranges from negative screening to actually trying to create a positive impact through our investments. And when I say negative screening, I mean, for example, against the IFC exclusions list, which excludes any investments into certain controversial industries such as tobacco and weapons, or any activities that involved any form of forced or child labor. And this is the most common form of ESG investing. I think it's also traditionally been the most used by investors because it starts from a point of looking at the risk and then building on that from a do no harm perspective. But we at Barak are looking forward from that, beyond that, towards solution-oriented investing. And what that entails is actually trying to have a positive social impact. And we see our main strategy in that regard has been smallholder farmers in the agri space, because smallholder farmers are innately ESG focused. They are stewards of the land, they are subsistence farmers, and we believe that in order to build a sustainable supply chain, you need to ensure that every participant from the beginning to the end is able to operate at a profit. And we are able to do that through financing because we can ensure that the SMEs that we invest in are creating a market, an off-take market for the smallholder farmer, as well as charging fair prices.
Anish, I certainly haven't forgotten about you, and I want to link with what Andrea just said about creating a market. How important is that? And is there a preference for ESG farmers in terms of pricing? Do you guys look at it from a value proposition? And what is the general take on providing that market against profitability of the group versus what you're doing for the farmers and sustainability on the ground?
Yeah, thank you, Zhann. I think it's a very interesting question because what we have seen over the last 5 years, sustainability has been considered by the client as a commercial proposition, which means that you don't need to really run it as a support. You don't need to run it as an element where you just provide capital for no good reason. I'll give you an example of cacao industry where most of the major chocolate manufacturers, they have adopted to the goals of deforestation, carbon footprint, child labor as part of their 2030 guidelines. ETG is one of the top 3 globally who have more than 50% of cacao being certified under Rainforest Alliance or UTZ. And this is such a nice combination because we do multitude of projects across different countries in West Africa where we add value to the farmers, not only at the production level, but also at the harvesting and offloading of their crop. And at the same time, the customers who buy this cacao, they give the premium because this cacao is done in a sustainable and traceable manner. And the additional income which is generated is directly passed on to the farmer because this is what certification is allowed. And when this income is passed on to the farmer, this is calculated as the living income differential, which is usually measured as LID in many of the African countries. So why I'm sharing this example just to demonstrate that a lot of these sustainability projects are now linked with the commercial benefit to the farmer who is producing and to the customer who is buying the product.
I think that leads nicely into a question I want to ask Henk. And Henk, I'm not going to keep it as abrupt as saying why, but you did discuss why you're doing this. Is there a balance between being seen to do ESG and then the economic aspects of creating these farmers on a platform that will enable you or them to become commercial and be a client of the coöperatie? Maybe I need to understand the cost benefit and how you guys view this, because essentially and eventually these farmers are going to become commercial. That's your aim. But is it worth it?
Yes, I think worth it in more than one way. There's looking at the economic side of it, but also the social impact is when you see people, a smiley face about what you've done for them, and how they empowered to basically make their own difficult day-to-day farming decisions. So that on its own is very fulfilling to see that, because it creates also positivity. But the economic side, so that's our primary goal, is to get it to the farming operation to be profitable. And for that, I think the structure of the finance is so important, because all these farms that we're involved in, it's government land or communal land, where it's to varying degree been neglected, and it needs some sort of recapitalization. And with that, then the better that recapitalization, the faster it can get into economic production. For instance, if you plant new trees, you need to put the shade netting on immediately, because then it grows faster. It's faster into production, for instance, on a fruit tree, a citrus tree. So there's that part of the funding. And then we will provide some short-term funding. And we have examples of successful ones. And there's huge, I mean, there's a huge potential to grow that part. Just in the Low-Veld, Mpumalanga, and Limpopo provinces, there are 57 farms, and that you can, through joint ventures, we try and put a commercial farmer, a successful commercial farmer with a community or an individual, and to use them as well to make sure that the production of whatever crop is successful. Yeah, so I think the ultimate goal, and through the technology now, it's much easier to even assist those farmers, those commercial farmers, with managing that business. I mean, the detail, for instance, you can see up to an individual tree, that they walk with an app up to the tree, that you can see, like I say, every 5 days, you can see that's their stress, and then they can go and inspect. Through the app, you can actually walk up there. So that obviously makes the possible economic production or profitable production much easier.
And to measure is to know.
Yes.
And I think to come to that in terms of the banks, and we certainly, as you would know, Henk, we place stringent reporting requirements on you. We even build it into our facility agreements to make sure that you have the responsibility to come back to us and see if these things work, if the initiatives are actually efficient. We obviously use that in our ESG reporting as a bank. Wouter, you guys, how do you view this, and how important is report back and measurement and obviously assessing the success of whatever you're doing for Rabo?
Yeah, I think the monitoring part is essential because it reduces the cost. As we discussed a bit before, we all think we want to do it and we all have to do it. But then you come into a lot of discussions with clients as well about the cost-benefit analysis, and then the benefit is more often focused on the short term. So we need to make it as efficient and cheap as possible to do the monitoring part as well, so it is implementable and actually adding value. So yeah, and I think that the key solution there is technology. And there are two important distinctions. ESG talks more about smallholder farmer, and there we need technology for scalability, because there's so many smallholder farmers. If we have to go to all the smallholder farmers and individually check what they're doing, then projects will not be viable. And we have more the commercial, larger scale farmers where Humansdorp also deals with. But there, also again, technology makes the projects viable or not. So, for example, an example there, aside from drone technology, where people are talking about, there are also specific companies that can help with analyzing the impact of a certain loan and if the KPIs set are being met. But what we are also doing in one project is where we're trying to help smallholder farmers switch to agroforestry. There we use satellite imaging. So agroforestry is a way for smallholder farmers to diversify and make their income more stable, but it requires an investment at the beginning because you need to plant trees, and you plant trees over your current crops that you have, so your income goes down. What we have developed is a tool whereby those trees that are planted, they will generate carbon credits in the future. And we use those carbon credits, we pre-finance and sell them, to big airline companies, for example. to help the farmer make that investment. But that's only viable if we have the technology to monitor that at the ground scale. So we're working with Microsoft there to use, you referred to satellite imagery as well, but we use satellite imagery there to see, okay, are the trees really planted? Are they growing? And I think the satellites are becoming so good they can even measure now how much carbon, based on previous research, how much carbon they are taking out of the sky. And that is required for the certification. So I think on the cost side, yeah, technology and scalability are very important themes.
Andrea, I want to ask you a question about that, and tying up to what Wouter said. It sounds fantastic, and technology is great. And what do you do in the deepest, darkest Africa, where you have small-scale farmers on an acre of land that kind of moves on the next season? How do you measure that? What does Barak do in terms of report back in an environment which is not conducive to the use of satellites and technology, and not open to laptops and the world of smartphones?
I think we, to a certain extent, there have to rely on external service providers. It's very tricky to get that kind of detailed information. We try to, as best we can, do our own due diligence on the ground, but to monitor and really accurately report on individual smallholder farmer behaviors, you do need to rely, to a certain extent, on other professionals who are able to get that sort of granular data for us.
Anish, in terms of reporting and measurement, you mentioned the cocoa initiatives. Do you think in terms of the sustainability of increased prices and incentives for these smallholder farmers, is this something that is going to be in the lives of smallholder farmers in terms of I'm getting a better price if I do things right? Or is the market going to normalize to some extent and say, look, I'm not paying this premium anymore because it's now par for the course? Just in terms of your view, where are we heading? Is that premium increasing, or is it likely to come down because of the prevalence of more and more of these social and governance-orientated projects?
Yeah, Zhann, this is a very interesting question, because the more these programs will do widespread orientation, the general sense is that the premium will reduce, because that's basically the demand-supply scenario. But what we have seen, the scope of developments are so huge that at least for next 20 to 25 years, I don't see these premiums coming down. We are just touching the tip of the iceberg, where there are so many elements to be touched upon. Currently, the major focus is on child labor, women empowerment, and the farming practices. And there is a huge array of activities that are still not touched by most of the clients, or I would say most of the chocolate manufacturers, especially in the cacao sector. Carbon footprint, deforestation, reforestation, these are still new and upcoming themes in this sector. And I believe that as we move along the value chain of these targets, we will get to see that these premiums will get stabilized. Maybe the targets that we are achieving today may change and evolve to newer targets, more respectable and widespread targets, which will do benefit to a larger community of farmers. So my short answer is that I see these premiums sustaining for next 15-20 years easily, and the targets evolving over a period of time to touch upon wider scope of activity.
15 to 20 years, I like that scope. You and I will be at the end of our careers then at that stage. So, Wouter, I want to come to a carrot or stick approach. We're giving these facilities to our clients with the intention that it will work, that they will make to the best of the efforts available to them. Obviously, our resources work towards ESG. A carrot or stick, do you punish a client for not conforming, for not doing what he's supposed to do, or do you give him a carrot saying, we're looking at reduced interest rates over periods if this works? Is there an incentive for clients, apart from the economic stuff that Henk spoke about, for your clients to deal with Rabo on a sustainability level?
I think that we started very much with the carrot, and when I say that already, I'm understanding that we will move to the stick in a second. So I think that initially the focus was very much on creating like margin incentives in like green loans or green bonds.
Ratcheting.
Yeah. And I would define that more as a carrot. But I find stick a bit a negative word to move to stick. I think that the answer is more in that we are really embedding the ESG risk in a client in our risk assessment of the client. So it is neither a stick anymore, or it's neither a carrot or a stick in that sense. It's basically, as far as we can judge, it's basically a view that we have on how is a client operating in this risky area for the long term. And through that, it becomes like, an integral part of how we assess risk, and in the end, how we can, of course, what we can charge or what kind of margins we will put place in our facilities. But maybe it's a good question to ask also, Henk, and I don't want to take over your moderating role, but how is your experience? Do you experience, if you are in a dialogue with a bank, Henk, do you experience it as a stick or a carrot when we have these dialogues?
You can't say now you're not into carrot cultivation. That's not how it works. Huh?
I'm going there, but at this stage it's about the stick, yeah. I think in general we find banks to be sort of very regulatory environment and sort of ticking boxes before you can start, rather than really believing in what you're doing. And that's how we started. We saw that as an opportunity. It's, by the way, also one of our pillars of success. We say the community involvement. We, for instance, have currently 23 community gardens where we grow carrots. And the excess...
I knew you were going to get there. Yeah.
The excess production goes through very simple communication on a WhatsApp group where the local restaurants also know that it's being produced, and it will go to the excess will go to the local restaurant. And it's organically grown. It's called Farming God's Way. I think it started in Zimbabwe. So that produce will then go to the excess to the local restaurants. But obviously, having on the commercial farms that we have, and we're involved in 11 of them, 1,600 hectares of irrigation, for instance. And by pooling, by making the total bigger, you will have one that's going to suffer more than the other. They might have a negative price cycle or some things that you didn't do, you didn't spray correctly. But if you take on the total amount that we're doing, I think the risk is then reduced, and it's getting that sort of funding initially and it's more the period, how long you finance, so that you can go through negative cycles. In farming, it's unfortunately so. You will have a drought, you will have some setbacks, and it's to go through those setbacks to ultimately become profitable. And I think the banks in general, we would say it's very and it's also maybe about alliances. You know, there is lots of grant funding flowing into Africa. But if we can just get a small part of that to subsidize some of the recapitalization that's needed, then the commercial bank will fit in quite well in terms of the funding.
Yeah.
So I think I heard it yesterday as well, it's about alliances and working together.
Andrea?
Yeah, to add to what Henk just said, I think the key to building sustainable businesses is being able to be flexible in your approach and to be able to sit with the business through short-term disturbances, to understand the seasonality and the needs of the business during certain periods of time, especially now during these unprecedented times of the global pandemic, the energy crunch, port delays, resource constraints, you name it. You need to be able to ride with the business in order to achieve the long-term sustainability.
Anish, I want to come to you. Andrea, don't go away, because I'm going to ask you the same question. Sustainability and the angle that ETG is taking on sustainability bonds that you're rolling out, do you see another investor type coming into these at different prices, or do you see that the interest is outside of just commercial banks, but that the margins are still pretty much commercial? Because I think the perception out there is that it's cheap money because you're doing the right thing. Maybe just your view on that.
Yeah, Zhann, money is never cheap. So I would say sustainability gives us a new angle. What I have seen and we work with regional and international commercial banks. This opens up a new window when you have targets which are market-linked targets, and they are the benchmarks where you have certain objectives that you achieve for the sustainability target. It helps you to attract same investors like commercial banks, or even the different set of investors who open up a new pool of capital. And that's certainly very interesting because within the banks, as you can see, a lot of regulators have started asking banks to look at a portion of their capital should be invested towards sustainability-linked or green-linked facilities. In terms of pricing, I have not seen much benefit, but at the end of the day, it's not really the only pricing benefit for which a client like us will work towards sustainable targets. Pricing is probably 10, 15, 20 bps benefit that covers barely the cost of those sustainability projects that we run to achieve this target. So I would say more than the pricing, it's the benefit of opening up a new pool of capital that you can access.
Andrea, I haven't forgotten about you. You guys operate on a slightly different level. You're slightly different from commercial banking and competitive pricing to large corporates. Your view on funds and other investors approaching Barak in terms of, I've got a special pool of funds for ESG, can you deploy that for me at a different price?
Yes, I think we are definitely seeing more and more investors that are interested in both ESG specific and impact focused vehicles. I think at the end of the day, it's still the goal would be to build a sustainable vehicle and to remain profitable, but you're able to invest in a broader range of businesses. Some will be commercially stronger with potentially a little bit of a lower impact, but that allows you then to take increased risk on other businesses that are potentially not as commercially sound, or they're still commercially sound, but not as attractive, but got a great impact story, and you have a real potential to create great impact there.
And again, the requirement for reporting and measurement is crucial.
Key.
And maybe just a point I want to make, and Henk, initially when we engaged with you on some of the initiatives that we're funding, we actually were under the impression that we're putting an almost inordinate amount of requirement on you to come back to us, report regularly, make sure that the savings are quantified. And what we found is that it's actually already embedded in the farmers' management systems. In terms of, you'll recall, water usage, which is a critical part of any citrus farmer's business. He knows exactly how many liters he uses on exactly how many trees, and he's actually gone and changed his irrigation system to make sure he uses less water. So I think what's important is that you might think that the reporting requirements are onerous, but if it's already part of the farmer's business and he's geared towards that, like you're saying, mentorship, to understand the farmer's financial prowess in terms of reporting, balance sheet, the income statement on a seasonal basis. I think then it's not as onerous, and it's not becoming a burden on the obligor to come back to us, because that information is actually readily available in most instances. Wouter, I don't know if you want to comment on that, and if that's your view from Rabo's perspective.
Yeah, I actually do think both in the smallholder farmer space and also in the commercial farmer space, and I deal much less with them directly than either Anish or Henk, but there's so much more information available than we think. Especially the smallholder farmer phase, I find banks sometimes a bit condensating on what smallholder farmers allegedly can't do, but there's so much they already can do, and information is there, and it's more extracting that information and make it then usable for the purposes that we are discussing today. Anish, you deal with a lot of, your company deals with a lot of smallholder farmers. I think there's a lot of information, right? And it's just make it, accessible,
digestible,
analyzable, digestible. Yeah.
Yeah. Henk, you want to say?
Maybe just a general comment as well in terms of banks. What we find is that they look at the assets and the balance sheet, whereas we, from an agricultural perspective, look at the operational efficiency. Because if you have the asset, that so-called security on your balance sheet, you're in trouble, because then you have to find somebody that can make that productive and create an income stream. So it's ultimately about that farmer that production process, that profitable production that's ultimately that creates a cash flow and not the asset. And obviously that's very difficult then to rate, you know, that farmer. And that's we as a partner, obviously being a cooperative with lots of members, we have some record of those farmers that's good farmers, productive farmers that can make things happen. And so I think it's maybe a general comment that in terms of that, and I know it's very difficult in your regulatory environment to just say, go and produce. But with the technology now, I think what we are trying to also show you is that it's easier now to show the investor, the funder, what's happening.
This has been fun, and I'm just cognizant of time. And so what you're saying, Henk, is that the horse is important, but it's the jockey that makes it go. So from that perspective, thank you. And I see we've lost Anish already. He might have lost interest. Oh, you're back. I'm going to allow for 2 or 3 questions. George, if that's okay. Cheers, Gabby.
Gabby Buck, thank you for this debate. It's really interesting. But I'm confused, and I'd be grateful for clarity. And that's about how tobacco, you mentioned tobacco a bit earlier, how tobacco fits in the ESG agenda. You know, we just had Permanent Secretary from Zimbabwe. We've been talking about small farm holders. You know, they produce tobacco as a cash crop. More often than not, it's because for them, it's a way of sustaining themselves away from poverty. But for a smoker, that's a choice as to whether they smoke or not. So I'd be grateful if the panel can just give me a bit of clarification as to how you see tobacco and whether you support it or don't support it.
It's actually a discussion that Wouter and I had yesterday. We seem to have disparate views on it. We have a bank in Zimbabwe. We fund tobacco processing and cultivation actively. And we see it exactly as you do, Cabby. It's tobacco planted in substandard soils. It's quite often the only crop that actually works there. And you're right, when you say that the second largest inflow of foreign currency into Zimbabwe is tobacco related, we see it as our responsibility to get involved in the industry and help those 6 million farmers that's involved. Same goes for Malawi. I think from that perspective, it's how you view this in terms of the impact that you can have in the communities. And certainly not averse to the industry per se, just looking at what it does for those communities and for the GDP of those countries in general. It becomes a bit more difficult question when you look at where tobacco goes, and I know there's a couple of financing institutions that has a specific view about tobacco cultivation, but I guess it's also where your market is and where you operate. I don't know if any of the members...
Yeah, maybe good to add to that. I think this touches on a very important point. Also, ESG, you need to see from a certain regional context as well, right? Yeah. So Rabo doesn't do tobacco because it follows, we're a European-based bank and their smokers are in a different light than the smaller farmer here at the moment. So we have said, no, we don't do tobacco. But yeah, I think that if you look at more from the regional lens, it makes very much sense to do still tobacco from an ESG sense. And linking that also, that argument to what we're seeing in Kenya, for example, we in general are decarbonizing our portfolio, doing less oil, doing less, moving first to gas. But cheap oil imports are essential for Kenya, Tanzania to grow and alleviate poverty. So are you then not going to do it, or are you going to do it? And more concretely, LPG, gas, is a substitute for people using charcoal at the moment. And after malaria and RS virus, cooking bad air in houses is one of the biggest killers for young kids in Kenya and Eastern Africa. So from a regional ESG perspective, you should actually do gas, whereas in other regions you say, no, we need to do less and less gas. So I think your comment is very good. There is a regional perspective on what is relevant from an ESG perspective.
Henk, you wanted to comment?
Maybe just in terms of that, see it as a cash crop that's being grown, successfully grown. Yeah. And only by funding it, you can create an income stream with which you can change what they grow and go to alternatives. So I think if you have a longer term view again, it's a cash crop, and it's just finding then an alternative to that. And by funding the existing knowledge that's there, you can then start influencing it to move to maybe alternatives.
Yeah, no, sure. Andrea, you mentioned in a previous discussion that it's so much more than just do no harm. We need to look at this holistically. And I think, especially in the tobacco industry, Gabby, it creates so many opportunities for curbing deforestation, alternative energy sources for the flues. And those type of things are things that we actively look into. But unfortunately, gents, we're running over time. So thank you very much. I think from the panel's perspective, thanks for an interesting discussion. And please feel free to engage with the panelists. I think we have a coffee break now. If we don't, then Chair Lady, where are we at?
We do have a coffee break right now.
But thank you very much for the panelists, and thank you for your participation.